And we're live with this week's Crypto Bootcamp weekly on-air hangout, HOA, whatever, our weekly sit around and talk about crypto session. We got Brian and Jeffrey with us this week, so we may have some other people pop in. We'll see how it goes, but a few interesting things going on this week. I think it's probably a shorter conversation, so let's talk real quick about Tron launching testnet. I think you know, it's one of the things that we've seen, and there was an article that was posted earlier today in the group about how something like 80% of cryptocurrency startups are scams or whatever. And you know, I had some objections to that article because I was like, well, if you're mixing together, you know, like failing companies with scams, and that's not really an accurate number anyways. But it is true that, you know, a lot of groups who are well-intentioned, you know, maybe they have some development experience, but they don't necessarily have any experience bringing a product to market. You know, they get into the process, they get a nice white paper together, they write a proof of concept, they make a little money from the ICO, and then they fail. You know, I mean, and just honestly fail. They thought they could do it. They run into hardships. They run out of money. Their burn rate exceeds what they're actually accomplishing. They don't hit their milestones. And so, you know, Tron is a token that's, you know, taken a lot of shit. People have called it a scam before and all the rest of that. But as of yesterday, with them launching testnet in time with their actual, you know, milestone as published on their development roadmap, we see that, you know, they're a company that's actually hitting their marks. So, you know, if we see a Tron mainnet come up, I think end of Q2, beginning of Q3 is when they're saying that the mainnet would be up. Like, I'm still bullish as hell on Tron as a project. It's something that I've stood up for Tron a while now. I've said, look at what they're doing. Look at their GitHub. Look at the commits. The code's moving forward. They're hiring more developers. They're making the right partnerships. And so to me, despite the fact that the market didn't respond favorably to their testnet going live, I'm just even more bullish than ever, because I've always said, you know, I mean, trade on the speculation, but invest in the project. And I'm very invested in the Tron project. So thoughts on that?
I'm just learning about the testnet, so I don't really have any thoughts on it yet?
Well, just in regards to your comparative, you know, analysis in ICOs versus IPOs, just what we've been reading, I think that's, you know, a super valid point. It's kind of always when you see people, you know, bring out percentages and scales of this versus that, you always have to wonder what are they comparing apples to apples and oranges to oranges. And like you said on the Facebook post, in regards to most IPOs are companies that have been out and are working and are, you know, are just in a crowdfunding stage of their game. They've been working, they've been making things move, and some even have been companies for multiple years ahead of time and bought a public company to move themselves into a publicly traded asset instead of...
I would say a lot more than some. Typically, when you talk about an IPO is an exit. I mean, I've been an entrepreneur for a long time, right? You typically have two tracks to exit for your company. You exit via acquisition or you exit via IPO. And that doesn't necessarily mean that you leave the company. It means that that's sort of when you cash out, when you're getting your investment back, right?
Right.
And I think that a big problem with the phrase ICO is that its similarity to IPO is confusing, right?
Sure.
People have a lot more expectation of an ICO than they should, because an ICO is a speculative bet. It is nothing more than crowdfunding your seed round. And IPOs are like way the hell after a seed round, right? Like, you know, an IPO comes after your seed round, your Series A, maybe you do a Series B, you have revenue, you are profitable. You don't take a company to public unless you're like profitable. You know what I mean? Look at Facebook's IPO. The only reason they even did the IPO was because they'd already exhausted every form of funding possible. And they were left with, okay, IPO is the last thing that we can do. You know what I mean? You don't take a company to IPO when it's like in the early planning stages. And so I think that, you know, I think the fact that it's called an ICO is part of the problem. that people think of it comparatively to IPOs when they're really nothing similar.
No.
They should just call them Kickstarters for crypto companies.
Crypto kicker.
Yeah, there you go. You abolish the ICO phrase. Well, and I think we're seeing a lot of that now too, right? A lot of the companies this year, ICOs aren't really what they're doing anymore. They're doing airdrops for early participants, you know,
Right.
because it gets around the whole, is this a security thing, you know, or any of the rest of that? No, it's not. It's, you know, it's speculative betting. That's all an ICO ever is.
Right.
Mark, I saw you unmute for a second, and you're the seasoned investor here. What are your thoughts?
Oh, well, it is very speculative. It's hugely speculative, and that's the thing is, if you want to gamble, then you know you're more than welcome to, as long as you know that's what you're doing. But you know, if you're being misled by these companies based on a false promise, like, oh my God, you know, we're gonna be this token, and it's gonna be like the next, I don't know, Spotify or YouTube or whatever the token coin, you know, claims to be, and that, you know, it's very misleading. I mean, stocks are misleading in general. They're already pretty, you know, and nobody trades based off fundamental analysis anymore. There's just, you know, you don't go and you say, hey, I'm going to buy this stock because I'm going to find out the company's actual worth, its projected earnings. Like, nobody trades like that anymore. And when you get into ICOs and these coins, it's even more of a very dark area where the lack of transparency really should. I mean, if you're looking for a solid investment, then that's probably not what you want to do. You know, if you are willing to gamble and you're like, hey, I need to roll the dice, and you know exactly what you're doing, not because it's a gambling problem or because, you know, it's just, you know that you're placing a bet and it's high risk, then more power to you. But my problem with them is that most of the investors that are taking part in this are not that informed. They have no idea. They're investing way more than they should. And, you know, I'm all for, you know, the smaller government is, the better it is for all of us. But when it comes to regulating these kind of things, I think it would protect some people, because I've seen too many people get burned by this kind of stuff. And let me ask you guys a question. I mean, we've had over 1,500 coins, right, in this crypto thing. I mean, there's so many of them.
Yep.
You know, can you think of just a handful that, you know, they took their project to fruition and it's working exactly how they intended to? Not Bitcoin, not Ethereum, anything else. Maybe
I think that's a good question, but I think that there's a problem with that question, and the problem is most of these coins have a 2-year development roadmap. And so,
yeah.
You know, when you look at the fact that the vast majority of ICOs came out in 2017, a 2-year roadmap means we're not even going to know if this team succeeded or failed till late 2019.
Yeah, and see, that is where I have a problem. And I don't mean to sound pessimistic. Everyone knows my stance on altcoins. It's not that I, you know, hate them or whatever. It's just that
it's super fucking high risk.
Yeah, I'm extremely skeptical because, you know, when I first learned a stock trade, I used to have some friends that were like, oh yeah, we're going to trade penny stocks. And I kind of liken altcoins to penny stocks because, you know, they're cheap. And, you know, there's a high risk, high reward. And yeah, absolutely. You know, one day they're triple the price, and the next day you think you can't go any lower than 3 cents, but it can. You know what I mean? It goes in a fractional sense after that, and it's scary. And, you know, I had a friend who lost $30,000 on penny stocks, and that was everything he had. And there was a couple more friends that didn't lose that much. I mean, they probably lost like 5 or 10K, but I never got into that because I said, man, anytime I mean, any real investor is not going to look for shortcuts. You're looking for longevity. You're looking for, I mean, I've been an investor for almost a decade now, and I need to be good at my job to keep doing it over and over and over. So if I take part in these speculative trades, we call that the suicide trade. And you never want to do that because you're putting your job on the line and things will never be the same again. You'll never recover. So, I mean, if you have some funny money to play with, sure. But for me, I can't do business like that. Just, you know,
I mean, it's
just
one of the things that we always talk about where like everybody says, you know, or not everybody says, but you certainly hear it a lot. There's no fundamentals in crypto, and yet there are, but just nobody fucking pays attention to them, right? You know,
Absolutely.
the fundamentals in crypto are, what is the problem that's being outlined? Is it a real problem?
Yes.
What is the solution being proposed? Is it a real solution? Who is the team making this proposal? Are they qualified to bring this solution to market? You know,
Absolutely.
When I'm buying tokens early in an altcoin, it's because I've evaluated those three areas and I think, okay, I think that's a real solution to a real problem. This team looks strong, you know?
Absolutely.
That's why I've held strong on Tron despite it like going into the toilet. I'm like, now I'm going to stay strong on it because I'm holding till the fruition of the project. That's what I believe in.
Sure.
Well,
and I think that,
good.
You know, and I think that, you know, I'm sure we've said this on a previous boot camp, but a lot of the people in the current crypto market, traders or not, have gotten by, you know, being an early adopter, maybe just being like, I had a lot of friends who jumped in because they were doing some Silk Road type shit, right? And they weren't looking to try and come up, but they had, you know, 10, 15 Bitcoins because they were going to buy something that week. And then it turned into $1,000. They were like, well, damn, I'll double, triple down on this, right? And then, you know, back to the point you made, Mark, you know, less government is better, right? But stupid is as stupid does. I mean, people, you just said a good trader doesn't look for shortcuts, and yet these people are looking for shortcuts. They're clearly not interested in trying to grow themselves as traders. They want money.
Get rich quick thing. Yep.
They want
cash. But you're giving me some good examples of success stories, but that I would say is a very small percentage versus the opposite of how many people actually lose on that. And yeah, I mean, that's the point of this, is that some people who take these risks are going to be, you know, very wealthy, very quickly, or I don't even know if that's the right word, but they'll make a lot of money. And then there's going to be other people that lose everything. And more often than not, this is a zero-sum game. So there has to be, just by default, more losers than winners. You know?
Well, to that too, how many people have won the lotto and become millionaires overnight and have shit to show for it? I mean, they even have lotto movies about how the lotto is a curse to so many people because of this same situation. People aren't mentally prepared to be put into space.
Exactly.
And then
yeah,
these shitballs. I got, you know, 100 grand gone within a year, and yet they haven't made 100 grand in the last 10 years of their life, but they can sure find a way to spend it that quick.
Yeah, exactly. So that's why, I mean, I'm not going to knock anybody who makes investments like that, because that's everyone's choice. And even I have, in the past, many years ago, I have taken part into some rather risky investments, but nonetheless, they were still calculated. It was never like a penny stock or anything like that. And, you know, I'm coming at it from a different point of view. You know, it's a lot of people in crypto, they have their day jobs or whatever. I don't have that. My day job is an investor. So if I roll the dice on one of these altcoins and I get burned, that's it. It's game over for me. So I can't do that. I have to continue to trade, grow my wealth. You know, one day I'll be rich, maybe not. I don't know. But I just don't have those options. And I have, you know, a good investor has a certain criteria. And so, you know, as Chris said, you know, there's just these cryptos, they have they do have fundamentals, and it's very important to look at that. And when you're looking at these white papers and when you're looking at these ICOs, and man, you really have to silence the hype when you're looking at this. You need to put that aside. You need to be like, what are you doing? Is it decentralized? Does it give you privacy? Is it quick? Is it cheap? Is it free? Does it give you gas like Neo? Like what is it? Those are the fundamentals.
Big problem. I mean, one of the things that we talk about frequently, doing contract blockchain development, one of the things that we're really hardcore on is we're very picky about who we choose to do business with. And if you walk in and you're not in the industry that you're attempting to enter, and the first 5 words out of your mouth include the phrase ICO, I'm like, yep, not a good match, But if you walk in and you're like, listen, I need a decentralized data model with an immutable data source so that I can provide auditable, certified supply chain tracking from point of origin to delivery, then I'm like, okay, well, then that does sound like a good blockchain solution. And then we have to ask, does this need a token, right? Because there are lots of tokenless blockchain solutions as well. The right match, a good project is going to be one where a token actually makes sense because there's fundamentally some piece of it. It's either an incentive token where you're getting a payback for the amount of work it takes to write data to the network, or the token itself contains data that is helping transactions happen, or something. There has to be some purpose for that token there. It can't just be mint up a new ERC20 contract and we're all going to make $1 million, because that doesn't fucking work.
Yeah, exactly. It's like, let me make a coin for gas, like filling up your car with gas. I'm just gonna, get all these gas companies on board, and and I'm just gonna make some bullshit up, and I'm gonna sell it, and boom, there's a new coin, and we'll just call it petroleum or gas. I mean, those two are taken already, but still, you know what I mean? Like, oh no, we'll call it fuel. There's this like. There's these coins being made just for no reason. And when Bitcoin came out, this, it meant something. It's basically a cashless peer-to-peer transfer system, and it's really good. It's virtually unhackable, and that's the way it is. I mean, I have a viewpoint on crypto and the whole community as a whole, and I was going to do a long post. I'm probably still going to do it. It's going to be pretty long, but in short, basically, I think that the market right now is consolidating, and I have not just seen this in this kind of market. I have seen this in many markets, and I've been telling my friends about it. I've been like, hey, even Ether, sell Litecoin. I mean, this is just me. I mean, you do what you guys believe in, but I firmly believe that everything is going to go into Bitcoin. It's going to get concentrated, and it's going to get a market share, because although there are some altcoins and some other coins that are worth something, it's starting to get smarter and figure out, hey, the only thing that really matters is what started it all, and it's Bitcoin. There is no network that is safer than Bitcoin. There is no store of value better than Bitcoin, and right now it's faster and cheaper to send than it ever has been. We're going to have Lightning Network, and when that comes along, and SegWit and everything else, there's no other crypto that is going to stand a chance. Maybe Ripple, because it's doing something else. But Bitcoin is like gold, and it is consolidating. And if you notice one thing about the market is every time Bitcoin drops, every other coin drops even harder. And when Bitcoin recovers, those coins do not recover like that anymore.
Except Tron.
Well, yeah, some of these altcoins, there are going to be some exceptions, but I think if you're generalizing, and in the long run, I think that, I mean, this is going to sound kind of weird and kind of conspiracy theory kind of thing, but it's not a conspiracy theory. It's more like these markets, they have natural laws. But basically what I think is that Bitcoin is taking this dump just to clear the air and wipe out all the other irrelevant coins. And what surprised me, even though I kind of saw it already, is that Ethereum is also taking a gigantic hit. And Ethereum has actual practical use. I mean, you know, with the smart contracts and everything, it is absolutely it's very practical.
That's also the reason why I'm bullish on Neo, because it's also an application platform, and Tron is also an application platform. I think those are specific use platforms, you know, that like, and Neo and Tron are sort of targeting the Chinese audience, which is 3 times the size of the North American audience. You know what I mean?
Yes, and Neo, I like Neo. I would have to say that's one of the altcoins. That's probably the only one that I really like. Litecoin, I've traded that before. That one's pretty good. And you know, the thing is, and this is the crazy part, is like right now everything's like at a fire sale. Everything's a huge 60%, 70% discount. And now people are like, they're giving it second thought, but Litecoin has, longevity. It's been around for many, many years and almost as long as Bitcoin, and it's cheap. And people are like, hey, I can't afford the $7,000 or $8,000 Bitcoin, but I can afford 7 Litecoins, and thus they dump money into it because people, they don't like owning a fraction of Bitcoin. They want to own a whole coin. They'd rather own 7 Litecoins than a third of Bitcoin.
Sure, it's like it's like eating. Everybody would rather eat a whole plate of food than a half plate. It's unit by.
But what about if you had a third of a buffet? You know what I mean? So it's just a mind trick. I mean, it's just a mind trick that people want to deal with whole numbers. And I told my friends, I explained this to them too, because I had a couple guys that were like, "Oh no, I'm gonna buy these shit coins instead," and I was like, "No, don't. Just get into Bitcoin." And they're like, "Oh, but I can only own a fraction of it." And I said, "So what? That's going to be the most reliable, highest return investment out of any other coin. If you were to bet that there was going to be one coin that's still around 10 years from now, what would it be? Of course, it would be Bitcoin. That's the one that is going to be around 10 years from now. I don't even know if Ethereum's going to be around. I don't know about Neo. Neo probably, maybe. I actually don't know about any of them, but I do know Bitcoin's going to be around. I'm willing to bet money on it. I am betting money on it.
I was about to say you are. There's a couple points you guys brought up that, one, I think that as far as the technical analysis not the technical analysis. Fundamental. Yeah. This market is a whole different side of fundamentals. Like none of the things Chris mentioned had anything to do with P&L, EBITDA, any of those kind of things. So people coming at the crypto market are realizing very late that there's a whole different subset of actual analysis that needs to be done on these companies to find out what they are and if they're worth it, and unfortunately,
stock market investment, it's like startup investment, and you should be looking at it like startup investment.
And not even that, but technological startup investment. So is their code being moved forward? How many commits do they have on GitHub? Who are the people on their production team? A lot less. And these things are hard enough for the people in the techno world to completely understand, right? You've got the few people in the background who were probably there when Bitcoin first started going, this is sound, technical shit right here that we're creating or is being created. So I'm jumping on this. Hopefully those are the guys who are rolling around in the Lambos right now. But then speaking back to what you were saying, Mark, about, for instance, Ethereum crashing, right? A lot of these platforms that create, especially Ethereum #1, that had all of these ERC20 tokens and all of their ICOs launched off of their tokens, right?
Yep.
Their money is tied back to Ethereum. So when Bitcoin crashes and they start seeing their money that they got in their ICOs, which is in Ether, going down, they're selling off to try and recoup money so that they can pay their people at the end of the week. So while I understand that, a rising tide raises all ships and so forth goes the saying in reverse, I think that it again, the comparison is not fair in the apples to apples, oranges to oranges kind of situation. I think that, Bitcoin stands away from all of those things because it's not an application platform. It is in and of itself doing a good job at what it said it was going to do. It was going to be a store of value. It's getting better at, being a fast because of the Lightning Network. It's getting cheaper at transactionals, all of those things. And that's pretty much all it ever wanted to be, money, right? It wanted to be a cryptocurrency. And all of these other projects, while tied to the name because Bitcoin came first, aren't technically that, right?
A lot of them are no better than gift cards.
Right. They're crypto platforms or crypto, some way to, conceptualize on the future where we all thought we'd have, credits. Well, what is a credit? Here's my credit to your credit to these credits, and we're all exchanging that. So Bitcoin became the first thing that became credit, and everything else is now a distributed ledger, like Chris was saying, non-transactional ledger that I'm writing that down so I can come apply to your job, by the way. Like, make sure to never say ICO.
Yeah, those are just basic things, right? People are so caught up with the get rich quick thing. I mean, it's like the gold rush thing, and that's one of the reasons why I constantly refer to where we're at now as sort of the 1997 of the internet era, right? Because in 1997, 1998, the internet was a known commodity. There were companies that were doing business on the internet. There were companies that were making money, right? And you started seeing a whole shit ton of speculative investment and IPOs when the companies themselves, I mean, we had companies that were going to IPO with no revenue. How the fuck does that even happen? And doing well at it. And so you saw these companies doing these huge raises because if you had internet as part of your description, everybody was like, wow, amazing. Well, then 2 years later, right, 80% of those companies were dead. And I fundamentally expect that by the end of 2019, 80% of altcoin projects will be dead.
I think even higher than that.
Well, this is like 1997, then I want to register all the ICO names possible.
See,
and somebody just Nike coin, I own it. Like Adidas coin, I own that too. You want a coin? Come get it from me.
It's a shame that it is that way, and it's sort of a double-edged sword, right? But because of all the speculation, there's lots of money in the market, and lots of money in the market means lots of participants and lots of excitement, right? But at the end of the day, that also means lots of losses in the market. I mean, Mark kind of nailed it. It is sort of a zero-sum game. You're going to have winners, you're going to have losers, and statistically, you're going to have more losers than you have winners.
Sure. Yes, and look at this, guys. So a lot of people, they are tripping out about, this Bitcoin slump or whatever, And here's what I have to say about where Bitcoin is. And I can only speak for Bitcoin because I have done so much research on it. I mean, this is what I do. Aside from stocks and futures, I do focus a lot on Bitcoin. And think about it this way. When people start being really pessimistic about Bitcoin, I tell them this. If Bitcoin wanted to die, it would have done it already. Each Bitcoin is still at around $7,000. That's a lot of money for one Bitcoin. And everyone is, just panicking because it did overheat and go to 20 a little too quickly. But 7,000 is still higher than at any point it was for most of last year.
Most of its life,
yeah. And I mean, it's at $7,000, and we're like, oh, it's selling off. I'm like, yeah, from 20K, it's selling off.
Yeah.
Like, you know, oh, it's going to reach 3K or whatever. You know, the people that are holding this, you have the Winklevoss twins and so many other people that have millions, and some have, you know, at least $1 billion worth in Bitcoin. Don't think that this is a passive investment for them. They're watching it, and there is a reason why they're not getting out. If they did get out, they would be instrumental in crashing that market, and it would just be a chain reaction. But I would say, despite all this, it is still holding up really well. It's $7,000. People have millions invested in this, and it's not crashing. People think it's crashing relative to, you know, its recent spike, but what's going to happen is it's shaking out all the weak hands. Sure. It's shaking everybody out. And, you know, the other thing about the crypto world is, quite frankly, at least from what I think, is people think they missed the train on Bitcoin. They normally, most of them, they cannot afford even one Bitcoin, and they don't want to own a fraction. And so, you know, this whole the altcoin market, with the exception of a very few coins that are still holding their value pretty well, you know, Neo being one of them, you know, it's just taken a huge beating. So I can't speak for where that market's going to go, but if I were to make any kind of prediction, I would say that it's probably going to do pretty bad in the near future and the coming years, with the exception of maybe a handful of coins. And I don't know which ones those are going to be. I don't know. All I do know is, based on my experience, you know, there is one king, and it's Bitcoin. And when it bottoms out, and it could bottom out at 6K or even 5K. And I actually kind of prefer that it does that, because if it doesn't reach a perceivably low enough point, it's not going to get the push that it needs to go to 50,000 to 100,000 and beyond. And I do think it will one day get there. I do. You know, right now you have $254 billion market cap, last I checked. But once the rest of the world and the rest of the wealthy people and institutions can actively invest in this, like, what if, you know, consider that Wall Street right now, I mean, you have JP Morgan, they just bought Circle. And, you know, if once Wall Street figures out a legitimate way to get in on it, I think it's game over. Bitcoin is never going to see anything lower than 10,000 after that. You know, everything's being legitimate. It's getting legitimized right now. So, and you have all these laws, and people are like, oh, regulation. I'm like, so what? You cannot stop Bitcoin. It is unstoppable.
Well, Julian would be losing shit right now, but yeah, it's, you know, regulation does not scare me. Regulation is a sign of market maturity.
So, yeah, and a lot of people are thinking, oh man, when they regulate Bitcoin, I'm like, no, they can't. You know, it's not an optional thing of, well, oh yeah, let's stop Bitcoin. You can't stop it. You would have to shut down every computer in the world to do it, and you would have to shut down the internet. It is unstoppable at this point. And they're not going to ban it because, well, most countries, including the United States, has a quote-unquote free market economy, and they don't ban assets. They don't do that. The only type of regulation that they're referring to is the scams on the ICOs, which unfortunately there's just too many in relation to the honest projects that it's pretty much safe to assume that, you know, 9 out of 10 chance you're going to get screwed if you get into an ICO. That's just no, or wait, 8 out of 10. Sure. 8 out of 10 if we're doing the 80%. But still, that's just those are just the raw numbers. So, you know, that's where the regulation is headed, is to protect consumers. And, you know, the stock market had the same thing. Once the age of the internet came along and we had the .com era, the .com bust and everything, there were soccer moms and just, you know, everyday people thinking they could trade stocks. Some of them made a lot of money. Some of them lost everything they had. And then the regulations came. And then the pattern day trader rule came along. Then the margin accounts came. they were like, oh man, if we don't protect these people from themselves, they're going to mess things up.
Yeah.
And that is what I'm looking at from the ICOs. And that's not to say that you can't strike it rich with an ICO. You can, if you look at the right fundamentals, you know what you're doing, and if you're willing to take that chance and you know exactly what it is you're doing, hey, go for it. I've done it with stocks. You can go ahead and take those high risks, but I wouldn't be afraid of regulation. I wouldn't. And when it comes to Bitcoin, this is one thing where it's like it really is unstoppable. There's nothing you can do about it. And speaking about Bitcoin, did you guys ever get to discuss that other topic about the whole putting in the GDPR?
No, we haven't gotten there yet, but that's a great topic to talk about.
No, okay. Cool.
I mean, I think we touched on it a little bit last week, but the GDPR touches on a lot of things that are almost impossible to live up to from a data immutability perspective, right? The GDPR includes things like the right to erasure, but with a blockchain solution, there is no erasure. Like that's fundamentally impossible. That's part of the reason why blockchain is it is the reason for that. Like it's. And so I don't know. I mean, I think that blockchain solutions are going to have a heavy obstacle in how they're going to maintain GDPR compliance.
Well, see, that's the thing. Is every blockchain solution except Bitcoin, because it's not a company. I read the article you guys, one of you guys posted, and you can't sue. Who are you going to sue if you want your data taken off from the Bitcoin blockchain? You have no recourse on that whatsoever. So that's going to be a huge obstacle for ICOs and any other company that wants to embrace the blockchain technology, which is thus another very strong argument in favor of Bitcoin, of why it's going to be around for the very, the long-term future.
Well,
because,
well, in that article that you're talking about there, what I took from it may be the more scarier part than even legislation or rules against it, but that bigger companies who have to be held liable for the GDPR would be liable even if they tried to use Bitcoin, right, for their corporate setups or transactional values, because somebody could not request to have their information removed, even if it's just in the European Union. I think there may end up being some sort of regulation adjustment in that, maybe towards the anonymity or how far into it you have to be able to remove yourself.
Unless it's used strictly as it's originally intended to, which is as currency. If it's just used like that, it's, that's what it was for. That's exactly what it was meant to do. And the crypto world just went and was like, hey, we could do all this other stuff with it. And in the end,
blockchain itself, right? I mean, like Bitcoin couldn't be sued. I mean, I suppose you could sue the Satoshi Institute or Satoshi Foundation or whatever, but the problem is blockchain is a technology, right? It's a consensus-driven, decentralized data model. And you're fundamentally shutting out the use of that technology with GDPR, which means that every blockchain application is at risk.
Right.
The only application that's not at risk is exactly what you outlined, pure currency.
Exactly.
Well, and even not true even to that, even pure currency, because if you can track back the wallet to the person using it, that also fails the ability for customers to have their data erased. Like, the IRS right now has, I know on one of the previous Hangouts we talked about, they know where your wallet is and where it came from. They can trace it back to IP address, hash you out, and Boom, there you go.
Exactly. But the reason why Bitcoin can get away with that is because it's not a company, and it can't be traced to anybody. That's because it is truly decentralized. That's why it's going to basically break the law, and there's nothing anybody could do about it.
But wouldn't you say that would keep larger players that would be taking the Bitcoin from the $10,000 range that you were talking about into the 50s away from being able to even, jump on that type of situation? Sure, they'd be able to work with maybe not even distributed ledger, like immutable ledgers or not. None of that would work for them. The whole blockchain technology is therefore then unavailable to them as a company because they themselves would be held responsible for the
No. If because they're going to hold it as a currency. If you take Bitcoin and you make it into something that it wasn't intended to do, like I don't know, like Ethereum running apps and contracts and things like that, then yes, maybe. But if Bitcoin remains just as a currency and these other big players buy it, even if they're holding it, if I'm holding it, if you're holding it, if JP Morgan's holding it, you still can't sue anybody for information that's on a Bitcoin blockchain because it is completely decentralized. So it's not, there's nothing you can do about that.
So
there's
if
no recourse.
If JP Morgan made a system whereby they were using Bitcoin to interact between banks or using, their customers, the allowance to use Bitcoin on their services, they couldn't be held responsible for the fact that they have customers' information that relates to the blockchain that even...
If they're just, okay, so like, let's say I send you a Bitcoin, okay? If I send you a Bitcoin, I'm not sending you the entire blockchain. I'm just sending you the coin itself to your wallet. If they treat it like that, then they're going to be fine. There's nothing you could do about it. It's the ones who have the blockchain information and the entire ledger are the miners. All of the miners all over the world in all these different countries, hundreds, thousands, millions maybe. We don't even know where they are, how many there are, and there's nothing you could do about that. So really, if JP Morgan wants to hold your coins for you and you want to swap them back and forth and trade them, you can't even touch JP Morgan because they're just holding the coins. They're not even holding the whole ledger. Now, if XRP, on the other hand, if they're a company, it goes right to them. So if you do some transactions and you got some personal information somehow ends up on the blockchain, whatever, and 5 years from now you say, hey, you need to delete me, and they can't do it, then that's it. That's game over for them. But I think they may have planned for this because they're not even using XRP primarily for their larger partnerships. But I mean, that's a different conversation. So
we've had that a few times actually.
Yeah. So back to Bitcoin. You're not going to be able to touch it. It's this whole thing that's happening. It's crazy. It's actually a really interesting topic because if anything, it's going to push Bitcoin and the entire crypto community into consolidating into Bitcoin even more and making it what it was supposed to do in the first place, which is just be a currency. It wasn't supposed to be all these coins doing all these weird stuff here.
The thing is, I mean, yes, Bitcoin is just fundamentally a currency by itself, but there is a strong need in the technology space for consensus-driven decentralized data models.
Yes, that I agree.
The reason these applications are being built, I mean, I'm actually working as a consultant on a friend of mine's law school thesis, where she's arguing that government functions like voting should fundamentally be blockchain driven and recorded because of the immutability of that data record, the ability to verify from point A to point Z everything that went into this. You know what I mean?
That would be awesome. And that's what I like about the technology behind, what crypto started, is that it can, give more applications that are really useful. Now, if they do that, you don't need a voting token now, do we? No. You know, no one's going to be, oh, now we're going to make a voting token. No. Just use the technology and use it the way it's, you know, the way it's beneficial for everybody. And, you know, it's just like, I read an article, I don't know who posted this, or if it was in this group or not, but basically they're, you know, the first blockchain movie from Hollywood is coming out. And if, I don't know, I don't even have any idea how this is going to work basically, but if the movie was on a blockchain, you'd be able to see everyone who has it and sees it. So that would kind of end piracy immediately. If you could somehow blockchain the media, that'd be pretty crazy.
Somehow that's what Tron is.
Wow. Well, then that's pretty
Tron
awesome.
is a media. It's an application platform that is focused on building media applications. So the idea is that you deliver YouTube or whatever your version of YouTube is through this, and so you have an immutable record of who owns the property, who's put it in there, who's consuming the property. You know, that entire thing. That's the foundation of Tron, and it's why I believe in the Tron project.
That's pretty good. But why do they need a coin, though?
Well, see, now that's a good question. Does it need to be token-based? In this particular incentive, you know, I don't know if you've ever read the definition of what constitutes a utility token.
Yeah, utility versus security token.
Right.
Yeah.
Okay, so the first and probably the single most common type of utility token is an incentive token.
Right.
You have to have nodes participating in the network to be able to get this data to write across the network, to be able to distribute it. And so an incentive token acts as a utilitarian answer to the need for incentive.
Okay, makes sense.
And that's something that's pretty common, right? Like, I mean, I worked on a couple of supply chain projects where they're using an incentive token model, and it's for the same reason. Because you need nodes in this network, you need node density. And so typically what you do is you use a deflationary model incentive token, where if you're one of the first 5 nodes, you're getting 5 tokens every transaction that occurs. But, you know, by the time there's 50,000 nodes, you're only getting 0.000005 tokens for every transaction. You know, it's like it's built-in supply-demand deflation.
Right.
But that's the purpose, is that without the nodes in a decentralized model, your token is slow and it takes forever, and you deal with congestion and all the rest of that. Having an abundance of nodes brings the network model to something that more matches the internet, for instance, where you have billions of decentralized nodes that are routing traffic, right? There are only like 7 major primary DNS servers in the world, but there are like thousands and thousands of intermediary servers that are helping route that traffic through. And so that's how you deal with like traffic management issues and things along that line. I mean, look at Ethereum, where they have the network lag issues being caused by apps like CryptoKitty, or CryptoKitties or whatever. You know, the more nodes that are in a network, the more likely you are for your network management software to be able to find a short, fast, uncongested path to the destination, you know?
Yes. That makes sense.
I think that what you know, crypto and distributed ledger technology is really doing is changing the face of information and the way we share it, right? And the accountability of it. I love that what the internet did for me and my generation was pretty much allow us to be connected to any information you could possibly even fathom. You can find it, right? Now, you know, we all say we can Google it. But before, you know, there were, you know, there's Wikipedia, there's every sort of outlet where you can find information. There's people writing about how to code. There's platforms. All this information is now accessible. And I'm, you know, at heart, somebody who thinks that all this information should always be free. But the fact that you have to buy internet service, the fact that you have to know that servers are going to be online and somebody controls this information, they could very easily adjust it and manipulate it. And we're going to a place now with distributed ledgers that once the information gets coded, like you're talking about with a movie or with, you know, somebody's Encyclopedia Britannica becomes blockchain based, no longer are we allowed, or are we not allowed, but able to mute that, to say we don't want it out there. Well, it's out there, it's gone, it's into the world. I know, you know, we always joke, like, once you put it on the internet, it's there forever. But it is and it isn't, right? It's there. Somebody found it. Somebody's got it, but you don't always have access to it. And I think that with the distributed, you know, decentralization of the information that's happening with blockchain, it's a beautiful thing, because it really is bringing information to everyone's, you know, everyone's hands. And I'm excited to see what the future. Hell, I would love to see an artist-based distributed ledger, whereby artists get to maintain control of their work. And when every time someone plays a video about, you know, or watches a dance or looks at a piece of art, the artist then immediately gets credited for all of the work that they've done for free over the last, you know, rest of their life, you know, and those kind of things. But that's just my grandiose ideas. But I'm excited about the technology, sure. And it goes without saying that with the increases in financials and things like that, people are looking to, you know, throw in $1 and win the lotto.
Yeah.
But it's not true. It's not something that's it's viable. And even somebody like me, who what it did for me is it pushed me to like, I mean, I've played in the stock market before, you know, I'm not new to it, but it put me in a position where it was like, you know, I'm going to people like you, Mark, and you know, people like Chris, and trying to get actual information to make better decisions going forward, so that I'm not, while I realize the volatility and the scarcity of all this, I want to be a smarter investor so that I can make wise, conscious decisions and be accountable for the decisions that I make on a day-to-day basis, like your book showed me, right? Like, if you're not willing to be accountable for the decisions you make, you're not really ready to be a trader, right? You're not really ready to be in this market whatsoever. You're wish and prayer. You know, you might as well throw some pennies into the local pond at the same time. Like, you know, like.
Yeah, and that's the thing, is if you need to take responsibility whether you win or lose. And there's nothing wrong with losing. And you know, that's the thing about that book by Mark Douglas, is that, you know, he often says, hey, what is the difference between, you know, a regular basketball player and, you know, Michael Jordan, who missed, you know, 1,000 shots, and then the other guy who missed 1,000 shots? And the answer was that usually athletes, they're great because they're not afraid to make mistakes. So you cannot be afraid of making mistakes. It's a, you know, it's a learned craft. And once you become the master at it, you can do so much. I mean, when I first started trading stocks back in 2008, and I did it all the way up until 2012 before I went back to school. But basically, it was a slow and difficult process, and then I got really, really good at it, and it was very consistent, profitable gains. And I noticed that I had to have these rules. And when it came to crypto, I merely, you know, just kind of, you know, redid those rules, but I had a framework to go off of nonetheless. So when it comes to, you know, trading stocks, I had to have rules like, okay, needs to be a reputable company, nothing that's going to go broke the next day, needs to have a certain range, needs to have a certain price, needs to have certain volatility, it needs to have a certain volume. And there's always these have you guys noticed that it's just always easier to buy when it's going up, and it's always easier to sell when it's going down? We all want to buy low and sell high, but right now when Bitcoin's at 6,900, I'm pretty sure that the guys waiting to get in are not going to get in right now. They're probably going to get in when it's at 7,500 or even 8K. And yeah, they might make some money, but they're not savvy enough to get in right now. So I started.
That's one of the things that is constantly argued about, right? Because a lot of the prevailing wisdom regarding day trading says, you respond to the movement as it turns, right? You don't bet that you're at the peak or at the valley,
Yeah, and I mean, it's not about, you don't have to pick tops and bottoms to be successful. That craft kind of gets honed and perfected over time, and you do get pretty good at it, but if you're not buying because you're scared, that's completely different than not following your own rules. And some of my rules are, I cannot buy on a peak and I can't sell at a when it's dropping that quickly, because more often than not, I mean, I don't know how many of you guys traded before, but more often than not, when it's falling really, really fast, anything is falling, we tend to panic, get emotional, and try and get out. But I've learned over time not to do that, because when it's falling really quick, even if it's going to keep going down, I wait for a little bounce upward, and it's going to come. You just have to be patient, need to be strong, need to be confident, wait for that bounce up. And maybe the loss is mitigated substantially when you do that. You get out and then you short sell because you've already seen the where the trend's going. But these rules, I mean, these are just for stocks, but I have some for crypto, and I have to have them. And what I'm beginning to notice is that the people that are, the Goldman Sachs, JP Morgan, the Wall Street guys, the traders, Forex, whatever, it's really difficult to get these, these big gains from stocks nowadays. The volatility is just not there. So more and more people are going to start going to crypto, the more it's legitimized. And when these people come in with their rules, that's when you're going to see this market change. And of course, more people are going to buy into it. So it's going to keep pushing the price of Bitcoin up. But anyway, that's where I'm coming from as far as rules go. I have to have rules.
It's a good place to we're at an hour right now, so I think it's a good place to wrap it up. Really, is to take that advice to the bank and pay attention over the long run.
Totally, and I'd love to hear your rules. Maybe if you want to write them out at some point, Mark, that'd be interesting to read what your crypto rules are.
Sure. It's going to take me maybe a day or two, but I'll do a decent post for you guys and let you know my thoughts on that stuff.
Perfect. We'll be looking forward to it. All right. Well, that's this week's Crypto Bootcamp Hangout. So see y'all soon.
See ya.